Hi, I'm Mike Gassewitz. Welcome to another episode of InFocus. Today I'm joined by Oliver Lee, head of our TriCert Insurance Agency. Welcome, Oliver.
Hi, Mike.
I know, folks, we're talking insurance, so please keep your fingers away from the fast forward or the next podcast button. I always like to, whenever starting with insurance, I always like to tell people I don't like insurance, and yet I have insurance. And which is an interesting thing to say as an executive in the wealth management space, but insurance does have a bad rap, arguably for good reasons. But so we think it's so important to talk about it, but put it in perspective. Today, this is something Oliver prepared and kind of had a look at the notes, and it's very interesting. We're going to talk about renting versus owning insurance, which is, again, an interesting way of looking at this. So let's start there. Like, what is this concept of renting insurance, Oliver?
Yeah, thanks, Mike. I'm happy to be here on this podcast and looking forward to sharing some of my insights with our audience. So, yeah, renting. It's interesting in the industry. One of the reasons why it gets a bad rep is that unfortunately a lot of insurance is sold and pitched to our clients, and it's not always the right reason. And one of those approaches is using kind of the renting and owning a house analogy. So a lot of sales insurance professionals would use this to kind of explain why owning insurance versus renting insurance makes more sense. And again, I'm here today to hopefully maybe kind of walk through this kind of analogy and maybe give you the real truth. That's what I'm hoping to do.
Okay. So why don't we start with what's the construct of renting?
Yeah. So, similar to a house, I think a lot of advice given to clients when they're looking for a home is, hey, if you can own a house, I think it makes sense, because instead of putting your money towards rent that doesn't build equity, well, put that same money that you would have put towards rent, put it towards your mortgage to own a house. And in the long run, you're going to be further ahead because you're going to pay down your mortgage, and then you're going to have some equity that's built up in a house. So insurance professionals would use that same analogy to say, well, instead of buying term insurance, where it's like renting, where you may not get anything back, you should be buying permanent insurance, where you will build up equity over time. And that's kind of the analogy, and that's where a lot of clients do end up buying permanent insurance at the end of the day because of that a comparison to buying a house.
So sounds, are you basically saying owning is better than renting, so to speak, here?
So that's pretty much the language that a lot of advisors would use. And so breaking that down, this is where that analogy doesn't really make sense. So maybe taking one step back. When we talk to many Canadians, insurance does play an important role. I know, Mike, insurance doesn't have a great reputation. I absolutely understand it. But it does play an important role, mainly to, if unfortunately many of our clients, if they pass away prematurely, using insurance to pay down debt, to replace their income. Those are really a lot of the key reasons why many Canadians should be looking at buying insurance. Now, what happens, however, as you progress through your career, you are going to build up more wealth. You are also going to get closer to retirement. You're going to pay down your debts. So what I'm saying here is that your need for life insurance will reduce over time. So as you get closer to retirement, you won't need as much because you're not replacing as much of your income if you were to pass away. And there will be a stage, hopefully, if you do have retirement plans and you've got a financial plan where you're on track to meet your retirement plans, then there will be a time where you actually don't need any life insurance. So that's really important to know, because buying permanent life insurance for something you may not need in the future is not necessary. Unlike, we always need a place to live.
Mm-hmm.
No matter how old we are, we're always going to need a place to live. However, with life insurance, you may not need it in the future. So it may not make sense to spend all of that extra money for permanent insurance when you don't actually have a permanent need.
So let me understand this. You're an insurance sales guy, and you've just said you don't always need insurance.
Yeah, that's true. And that's, again, I think that's where I do recognize that, I'm very unique, and that's probably not something many of our audience have heard, but that is actually the truth. And that is actually advice. And this is something that we say to all our clients all the time. It's advice that we would give to our own family members, and I'm sharing it with our audience.
I love that. So really, I guess it's complicated. At the end of the day, needs can change with time, and there has to be a bit of an understanding of that. So what do you recommend to people listening to this? What's your recommendation to them?
Yeah, great question, Mike. This sounds like a broken record. We mention it all the time on our podcast, but it's a financial plan. A financial plan will not only calculate your insurance need and how that need kind of progresses over time, but probably more importantly, it gives you priorities. So something that I didn't mention is, I'm kind of assuming, but a permanent insurance policy that is there forever, the kind of owning life insurance, that is significantly more expensive than if you purchase term insurance.
Right.
Significantly more. And when I see situations where a lot of our clients were sold or pitched permanent insurance, I often find that many of those same clients have not maximized our RSP. They have not maximized their TFSA. They have not paid down their debt, meaning all of that extra money that they're spending on permanent insurance, there are other priorities for it. There are other places that are probably a better use as opposed to putting it in permanent insurance. So a financial plan will help create those priorities, will help give that perspective of, hey, if I have an extra $100 a month, maybe I should be putting it over here as opposed to a permanent insurance policy.
Really good advice. And one thing I also like to stress is, and a financial plan makes sense for everyone. And there are those folks who've done incredibly well. Let's say, they're very well off. And sometimes we'll get that feedback that says, well, look, I'm in such great shape. I don't really need a financial plan. And I always like to point out that, I hear you, and yet really the plan kind of changes. It's almost around optimization, right? In terms of wealth optimization, because there is, especially with insurance, there is a tax angle here, especially in the context of more complicated situations. If you're incorporated, have a business or the like. So yeah, really good advice, across the board. Doesn't matter really what asset size or how well you have done or plan to do.
Yeah, absolutely, Mike. So to kind of just summarize it from my perspective, I think, what's important is, again, match the type of insurance product to the need that you're trying to solve. So if it's hey, I'm protecting my income, I want to make sure that, if I die prematurely, my family's going to be okay. Term insurance is okay for that. That's the right product to fit that need. I think the second part is making sure that you allocate your money to the right priorities. Again, create that financial plan and make sure that if you've got any extra cash flow, it's going to the right spot. And then finally, don't fall for the sales pitch. Often these languages are here to help create and promote more expensive products. And again, I'm saying that you don't need that. So that's the advice I would give, again, to my family members.
The other thing I want to throw, first of all, yeah, again, excellent advice. The other thing I'd throw out, and I think you can concur with me, is like, look, never hurts to run concepts by your accountant, your CPA. That's, obviously we're big believers in that. That's how we've designed the whole firm here at TriCert. In terms of the CPA is pretty critical. But if you have insurance elsewhere or considering insurance elsewhere, don't hesitate to to ask for some advice. That's what we're here for. Your CPA is here for, and yourself and the team, even if it's not with us, to provide that advice if needed.
Yeah, absolutely. We often mention to our clients that a second opinion. We certainly can provide a second opinion.
Excellent. Oliver, thanks so much for this.
My pleasure, Mike.
The only guy I know makes insurance interesting. I love it.
I try.
Folks, as always, if you have any questions about insurance or about your investments or, how we integrate, don't hesitate to reach out to your wealth advisor at your accounting firm. Don't hesitate to talk about it with your portfolio manager. And also don't hesitate to reach out to myself. Take care.